Peter, we were talking in the break, you, Mandy, and I, about your end 2025 S&P 500 target. You got 4,100. Why so bearish?
Well, it's not really that bearish. To get to 4,100, you just need to assume two things. One, you need to assume that the forward P multiple on the S&P drops to 17, and that earnings estimates decline by about 10% from current levels. That's all it takes. Now, if you look at the average forward P multiple between 2015 and 2019, a period which didn't include a recession and which encompassed most of Trump's first term, the average P multiple then was 16.8. So I'm saying that in a recessionary scenario, because I do think a recession is likely next year, we'll get to 17p. That's not particularly challenging, nor is the assumption of a 10% decline in earnings estimates challenging when investors currently expect earnings to rise by close to 15% over the next 12 months. Usually during recessions, earnings estimates fall by closer to 20%.
What's going to lead to that earnings recession, Peter, if that's what you're calling for? Is it further rationalization and the market losing their religion over the AI narrative and the CapEx story as well? And NVIDIA, of course, serves as a reminder of the equity concentration risk.
I mean, that'll be part of the story. You know, it's interesting. If you look at S&P 500 free cash flow per share, that's actually down 3% since the end of 2021 because so many tech firms have been splurging on CapEx. Now, of course, some of those firms will succeed, and all those chips that they're buying from NVIDIA will prove to be useful, but there'll be losers. And those losers will probably have to write off that CapEx. If there aren't any losers, by the way, then you could have a very competitive market for AI, and those monopoly profits won't materialize either, and we'll have write-offs as well. But I think the bigger issue, the one thing that I really worry about next year is what happens to global growth. I think we're going to see a recession. The trade war will compound that, but simply the fact that monetary policy has been so tight, that monetary policy operates with lags, that will also be an important driver of the coming economic slowdown.